One of my favorite trading tools is the money management algorithm. It's also an equity curve management algorithm or a trading system for your trading system. But basically, we're taking a look at this equity curve. It is a swing trade system here on your left, and it's a really nice looking equity curve. Just a few little dips here along the way. Looks pretty perfect from most traders' perspective. What is the catch? There is no stop loss on this strategy. So the worst case drawdown is $15,000 or 300 S&P points. Not many traders want to go through that, even though it does have 78% winners. The close trade drawdown is only 19,1250, and the net profit is 57,137.50. That's one contract since November 3rd, 1997, which is the beginning of the E-mini S&P and when it started trading. And what is a way we can take advantage of this equity curve without having to deal with this kind of drawdown? We don't want to deal with this kind of drawdown. We take a look at, say for example, this trade, and that's only 70 points that it went against us. And take a look at some of these others. 70 points against us, and then it stays down here, and then this trade finally exits over here at a loss. And what else? See this trade. Some of these other trades. The most recent trade is also against us. So this is a swing trade, longer term swing trade. We're used to day trade strategies. How can we take advantage of this equity curve and this strategy without having to deal with those kinds of drawdowns and that kind of risk? And there's two ways you can do it. The first way that I would mention is options. And options are not something we're going to discuss. It's not part of what we do. It's more subjective, and it's not as systematic. But I have a systematic way to trade this equity curve, and this is with money management algorithms. And you see the chart on the right. I'm going to click over here on this, and you'll see the equity curve for it. And this is the equity curve for the money management algorithm version. What the money management algorithm version does is it looks at the chart on the left, and it takes trades based on the chart on the left, based on additional equity curve management rules. And so we take a look at the performance summary, virtually the same total net profit, and the drawdown is 43.75. The average trade profit goes up to 229.08. The percentage of trades that are profitable go down because it does have a stop loss. It has a $500 stop loss and a $1,000 profit target, whereas the other strategy did not have a stop loss or a profit target. So how does this work? Basically, we take our money management algorithm. We're using in this scenario, rule number 12. If you have the money management algorithms, you know what I'm talking about. If you scroll down here, rule number 12, we buy the drawdown. And here are all the rules, rules 1 through 12. You can see all the rules you can apply to the money management algorithms. There's also rule 13, which is more of a martingale strategy. And we don't employ that much because you're buying against losers, increasing losers, or buying on losses. We mainly focus on rules 1 through 12, and in rule 12 we buy the drawdown. So if you want to apply a rule, you turn it to on by setting it to 1. If it's not 1, it's 0, which means it's off. And so there's about 8,192 combinations. You can have any and all of these rules apply. You can have all the rules apply. You could have 2 or 3 rules, 5 or 6, any combination of rules. 8,192 combinations of rules. But we chose rule 12 for this, and the parameters for rule 12 are down here. We simply wait for a $3,000 drawdown on the equity curve to start trading it, and then once there's a $2,000 run up, then we stop trading it and wait for another $3,000 drawdown, and then when it goes to another $2,000 run up, we stop again. And so it's a swing trade strategy. We don't worry about the entry time. We can take trades any time of day. We don't worry about the exit time. We have a $500 stop loss, a $1,000 profit target, and we don't sync the exit with the master, which means when this trade on the left gets out, we don't automatically exit. We just go with our profit target and stop loss. So if we continue to take a look here, once again, take the strategy on the left, 57,137.50, $15,000 drawdown. Average trade profit 144.29, 78% winners, profit factor 2.68, 396 trades. Here's the equity curve. Strategy on the right. Sometimes this goes away, so you have to turn it off and back on. Strategy on the right, it trades more. has a stop loss in the profit target. So you see this sort of scenario: 43.75 drawdown, 251 trades, 229.08 average trade profit, 1.89 profit factor, 48.61% profitable. And again, here's the equity curve, and it's currently making equity peaks. So this is one way you take advantage of an equity curve like this on a strategy like this. Many times when you see a strategy like this with a very nice equity curve, it will oftentimes have no stop loss, or it will have really small average trade profits. And so this is one way we can manage this no stop loss scenario and still take advantage of a system with a nice equity curve without having to deal with this kind of drawdown. And so very simplistic strategy, and I wanted to update that for the money management algorithms. I'll have a membership site for this soon, and you can download that if you already have the money management algorithms. And I just wanted to share that with you, let you know what the latest is on the money management algorithms.